Good afternoon, everybody. Welcome to Paul's Money Market Update, 157 for the 7th of October, 2024. I hope you're all well. I hope you have had a relaxing weekend. Hopefully that you can see the slides and hear my voice. That would be fabulous if you can, people in the room could confirm that. I would appreciate that. As always, people are very welcome here. If you're joining us for the first time, the Monday Market Update is literally just that. It is me racing through as much as I can get in the next 25, 30 minutes, looking at strength and weakness within FX markets, and also looking at some slides or some charts that might be of interest or relevance to yourself, and then having a look at the live market. Okay, it is not a trade signal service. This is not a recommendation service. It's purely just what I'm looking at in the market and what might be of relevance or of interest to yourself, and you might want to add to your own watch list. As always, you are very welcome here. Just remember that you are always responsible for your own trading decisions. And as always, if you want a little bit more education, you can join me at 2 o'clock London time every Monday for Active Trades Monday Market Matters webinar, where this week we'll be talking about how to trade gold. Okay, probably quite apt based upon the price action we've seen in gold this year. You can either register on the Active Trades website or use that QR code there to take you through. And as I said, every Monday, 2 o'clock London time, I talk about something regarding education and trading for active trades. Okay, let's dig into our own element here. So this is the STAM. I appreciate if you're new to trading or if you're new to joining us, it might seem maybe a little overwhelming or intimidating, but you get a hang of it pretty quickly. Really, it's the work I do every weekend to basically help me establish where's the strength and where's the weakness, primarily within the FX markets, but also in indices and commodities markets, because by doing so, that helps me allocate my time, energy, and resources better for the week ahead. So what is this telling us and how can we use that information? Well, here we are. Okay, here we are. We are into week 41 of the year. Okay, for the 7th of October. Is there much change in strength and weakness? Yes, there has been a lot of that based on the price action of last week, and also the non-farm payrolls. Okay, from last Friday. I said last week that we are getting into the run into the US election. And that a good NFP number would be beneficial to the incumbent, and so not to be surprised if those numbers were pumped. And it clearly sort of busted its estimates on Friday. That wasn't really much of a shock certainly to me or to anybody who's been listening to us here. No real shock in that. Okay, and we saw some volatility on markets, and that has also basically had an impact on the FX markets. That will probably be exacerbated this week as we go into some of the US news. So we've got CPI on Thursday afternoon and PPI on Friday. And also we have the Kiwi dollar, okay, is sort of into Wednesday morning. It's their cash rate from their Royal Bank of New Zealand, and people are penciling in a 0.5% interest rate cut in the Kiwi dollar, but they are not no longer in the US dollar after the sort of news of Friday. But we'll look at that in a moment. What we're seeing here is that Aussie dollar, okay, has basically pushed its way to the top of the pile. We spoke about this last week about how it was kind of moving up the ranks based upon them not looking to cut interest rates as quickly as other Western nations, and also the little bit of the sort of, let's call it, the kind of Chinese stimulus frenzy that has been going on in Chinese markets and stocks, and Aussie dollar is quite often used as a proxy for that. So we have seen that there. Sterling remains okay in second place, but if you've been looking at the price action for the last couple of days and even this morning, okay, you'll see that basically, as I have said all summer, it's holding on to that place more because of the weakness of others, more so than any particular ingrained strength in the UK at the moment. But it holds its place there on STAM at the moment. But when I look at the sort of the sterling pairs, I see a very mixed bag in terms of their overall STAM environments. At the other end of the extreme, what we have seen is, look at that, big drop from Japanese yen from being top of the pile for the last month or two to bottom of the pile. And that was based upon the comments by the kind of the new incumbent Prime Minister, Kishida, which we spoke about last week, him basically coming out and making a rather unorthodox comment about how there didn't need to be any more interest rate rises in the yen for the foreseeable, which was quite the opposite from what the economic teams have been saying. And so a lot of that was kind of a perhaps political pontificating in the run-up to the new Japanese election at the end of this month. But you can see for yourself there the impact that it had there on the Japanese yen. It really took the wind out of the sails of the Japanese yen, and we'll have a little look at that later, okay? And that's what we saw. Furthermore, okay, joining it down in the bottom of the pile is euro. Perhaps not a massive shock that, okay. Once again, German factory orders were woeful numbers today. Really, the German economy just can't catch a break one way or t'other at the moment, and all of that kind of just weighs upon the people's confidence in the euro itself. Replacing it there as well, what we've seen is Swiss franc is kind of nudging its way up. Canadian dollar has finally broken out of being at the bottom of the pile. A lot of that to do with the oil price, which we'll look at the moment. A lot of that is kind of reaction to effectively people's illusions that it is a gangbusters economy, and also the sort of, let's say, the widening, the broadening, the deepening of the kind of war in the Middle East. What we've also seen is US dollar get itself off the bottom of the barrel, so to speak, and that is a lot more reflective when we look at the US dollar in a moment's time. But as I said, we can see that Kiwi dollar, sterling, basically the bottom of the pile for the start of the week. That shouldn't really be a massive shock, okay, in terms of Kiwi dollar getting a 50% basis cut, and then sterling being a little bit woeful at the moment. If you look at the indices, the kind of the bumper jobs number is kind of had an interesting impact across the indices, but they are still showing themselves as a strategic buys. I think maybe by the end of this week we might have a more interesting take on it. The non-farm payrolls numbers were basically, with them being gangbusters, is a sign of a very strong economy, and not one in which you would be cutting interest rates. But the CPI data on Thursday, if that is, let's say, below estimate and shows a kind of a inflation, falling, decelerating rapidly, that would basically encourage interest rate cuts. So perhaps there will be a bit of a toing and froing this week over the US instruments or US related instruments as they basically sort of try and find the new narrative and the new pathway for that. Interestingly, VIX, okay, despite Dow pushing to new highs and all this kind of stuff, the VIX still remains bearish, and that has actually got above 20 on the numbers, okay, which is normally an indication of increasing volatility. Oil, having been sort of basically strategic sell, has now shifted to being STAM to Bravo. So there are shifts going on. Okay, there are shifts going on, and we'll see that when we look at the live charts in a moment's time. Okay, let's have a look at a few charts of interest. These are just normally weekly charts that either they are in this particular case where start to get back into earnings season, and there's a fair few instruments that might be of interest, or basically the price action is curious, and you might just want to watch and see how they play out and add them to your watch list. Pepsico are on, I think they're releasing Tuesday, and then we've got a bit of a week, sort of it gets busier as the week goes on. We've got, I think, Delta and Domino on Thursday, and then Friday we've got, I think, JP Morgan, Blackrock, and I think Wells Fargo off the top of my head, but we've got a few charts in them for here. PepsiCo, okay, this is probably an indication of US consumer trends, okay, and you can see for yourself there, okay, for a good while there, we were in a pretty strong trend, and we peaked out, topped out. What did we top out with? That's a bearish engulfing candle, bearish key reversal candle, very nicely dropped to the 200, which acted as support. But even the bounces, okay, the bounces have been getting lower. Each high is getting lower. But what we have had is the 200 period moving averages acted as pretty significant support. There was a nice kind of bullish pinball there, and here's where we find ourselves. Okay, this is where we find ourselves running into this week. Price and the averages are all coiling up there, okay, just in front of the earnings tomorrow. Okay, so I'd be interested to watch, if there's going to be good news, is that going to just basically use that 200 period moving average as a springboard to raise us higher? Or if the number's poor, okay, is that going to be a case of, the 200 period moving average cracking? Because if it does, well, then, really you're starting to look down towards that kind of, 155, $155 region there. So, as I said, you might want to add that to your watch list and see how that plays out tomorrow. Then, another company I thought, most people will know or will have used, whether frequently or infrequently, is Domino's Pizza, DPZ. This is the weekly chart of them, and they are releasing on Thursday. And to me, that when I look at a chart like that, that really just looks as a chart that has been predominantly in a range there between $300 to $320 up to sort of $500 and $520, maybe a little bit. We had it every time we've spiked higher, as you can see. We've come back into that range, and here we are, right in the middle of that range, sat on $400, running into the earnings. Okay, on Thursday. So my trading style is always I like to trade at the edges. There for me. Let's just clear this down. For me, this would have been fantastic. That kind of double top there. Okay, at 500 after a nice trend up. That's the kind of where, as I said, I like to trade reversals off edges in that sense. When price is in the middle of a range, I'm not really as interested, because really it could go either way. There's nothing there that telling me in the price action that which way it could go based upon the data this week, the news this week. Yep, we're sat on the 200, which I'd noticed, but I would be wondering if if it pops up into the 50 and the 20 and then gets caught up there. Okay, so I'll be watching that, but as I said, my view is that could really go either way. Okay, as I said, I like to look at the edges. When it's prices at the edges, that's when I start to get very interested. All right, then Friday we've got JP Morgan as one of the banks, okay, that's running, and this is the weekly chart. JP Morgan, you can see that is pretty much in a good, strong uptrend, isn't it? It's been very respective of the blue 20 period moving average. It's where we are at the moment. I tell new traders, okay, just basically you want to find a new trend and just ride it. All right, good trends leap off the chart. You don't need to force it. All right, when price is doing this and not really sure what the score is, well then there invariably you can ignore that. But JP Morgan has been in a good uptrend. JP Morgan has has pushed its way there to $225. We've got $200 here, which has acted clearly as a kind of a level, as a support, as a base. I would be interested to see whether the date on Friday brings us back down to there before we make another move up there, or considering that we get good data out across the entire sector. So that's what I'd be looking for at the moment. But yeah, it's JP Morgan is a big boy, all right. So everyone will be kind of curious to see what they've got to say and what that says about the state of the sector and the economy. Linking in with them as well on Friday is Blackrock. Now, I would sort of kind of admit in kind of interests of disclosure. My cousin works at Blackrock and she's done well. I'd employ her tomorrow. She's fabulous, and I've no doubt Blackrock love her because she just she worked her backside off, and that and other things is what is helping Blackrock pretty much gobble up the entire world. Okay, so but anyway, let's not get into such rants as that. What we're interested in as a trader and seeing, is there an opportunity? Once again, you can see that really since those kind of October 23 lows, we can see that we have been in an uptrend. I appreciate maybe here we were a little bit just kind of compound, just in consolidation. But you can see for yourself, okay, we continue in that uptrend, and then I'm looking at, all right, well, the recent highs was just under 980. I think they were about $976. Big round number, 1,000. Are the earnings on Friday going to be enough to basically to give it a shove north to A, even make the highs, or B, make that secondary high of $1,000? So it's getting to a point where I'm getting interested, and yeah, as I said, it's a trend. I would just watch that. That's on my list to see how that plays out. And just to finish off before we go to the live markets, this is XLF. Okay, this is the ETF for the financial sector. You've just looked at BlackRock's an uptrend. You've just looked, more importantly, probably JP Morgan is in a nice uptrend, and you can see for yourself XLF is in a nice uptrend as well. And for good overall strong trends within indexes and markets, you do need the financial sector to be in a good place. I would suggest that is there at the moment, and we will wait to see what comes out of Friday. I think Friday's going to be a big day, okay, with those financial companies. I would look at that as just, it's not the best sort of ascending triangle, but there is definitely a kind of around about just under $46. I'd say that, there's a ceiling there. Is the data on Friday going to get as a blowout and breakout of that? So maybe add that to your list and watch out what's going on. Okay, so there's some charts of interest you might want to take a look at. Let's switch across to the live markets and see what's going on there. So just bear with me a moment, and we'll switch across to the live charts. Okay, so I'm hoping you can still hear me. Hoping you can see some of the charts. These are my kind of indices charts. Let's just for people. All right, Dow, Nasdaq, SP 500, Russell, FTSE, Nikkei, DAX, and oil. Why don't we have a little start with oil there? Okay, whilst we're here, it has an impact. Okay, Bosch, right, weekly chart of oil. We had talked about how it had been a great downtrend for the last couple of months. We had a bit of a morning star there, all right, but actually it was this last week. Look at that, bang, that data there holding around about 68.70, but that is a big bullish engulfing candle. It's a real reversal there, and now as you can see, we're carrying through. We are trading up into those averages, so I'm always curious to wait and see actually what happens here, and whether there's whether we can get through this, or whether it acts as a stumbling block. But you can definitely see, especially going to the daily chart, you can see last week. Okay, you can see that basically how we worked and how we've started this week as well, and that has had a knock-on impact on Canadian dollar. Remember, we said Canadian dollars come out at the bottom of the pile on the STAM. All right, so just take a note of that. When we look at the Dow, all right, Dow is still an uptrend. Last week, I'm curious because what we're looking into was we printed a nice, that I would call that a momentum pin bar, as in it's a bullish pin bar that's supporting the ongoing momentum. That's what we're seeing there. The daily chart doesn't look as exciting, but there's wicks and there's buying going on. Wicks and buying going on there, and as I said, we might have to wait till Thursday to get some real clarity on the next direction move on that. But what was noticeable was that, we had bullish supporting pin bar on the Dow, bullish supporting pin bar on the Nasdaq, on the S&P, and also to effect on the Russell as well. Okay, so they're all very much aligned, and I'll be interested, as I said, to see whether the data on the data we've got sort of FOMC meeting minutes on Wednesday, but I think CPI will be the really big, the big thing that might shift us there. Okay, so it wouldn't surprise me if markets sort of just positioned themselves all right for a couple of days, and then CPI gave the lift off signal, so to speak. Closer to home, all right, closer to home, back here in Europe, we've got the DAX. As I said, the DAX economy is the German economy, the data there just goes from bad to worse, doesn't it? Every day there's some sort of shocking news coming out about that German economy. Okay, I don't claim to in any way to be an expert on the German economy, but I can. What I'm fascinated by is that we're getting bad news out of the economy, but the DAX has been, DAX has mostly been in an uptrend, making new all-time highs. Now, admittedly, last week we kind of came off it a bit. Okay, you can see for yourself there, but we saw this. Okay, last week. Just look at that. That basically, I look at that as kind of a domino candle there. We've rolled our way down. We rolled up to the end of the week after NFP, and we've pushed our way down there. Okay, is this a case of we're getting ready to maybe roll over on the DAX finally? Okay, it's my view is, I'm watching this in the daily 20-period moving average. Okay, if that acts as support, it keeps the party keeps riding higher. If it breaks that 20, then I wouldn't surprise me if we go to the 50, in which case there'd be tactical shorts there on the DAX. At least the DAX is a bit more interesting than the FTSE. The FTSE, what we have here, look at that for the last few weeks. Yeah, like the American indexes, it printed an inside bar pin bar there, holding above the 20. But really, as I said, you can see that's just tightening up. I don't think anything major is going to happen until Rachel Reeves gives her budget on the 30th. And that's why we're seeing that tightening in the FTSE. I think they came out at the weekend or Friday, talking about their carbon capture. They're going to spaff 22 billion up the wall on supposed carbon capture and stuff. Good luck with that, lads. And what we will see is, that very it was a contributory factor towards sterling kind of rolling off the top over the end of last week. We also saw STAM not even 100 days into his premiership, and he's lost Sue Gray, his chief of staff. Okay, and she went at the weekend in very, very quiet circumstances. But I suspect what we're seeing is we're going to probably see more of that volatility with that, and that will have an impact on sterling, which we'll look at in a particular moment. But yeah, FTSE. I mean, look at that. That's the daily chart. For the last month, nothing remotely exciting about that daily chart. Is it? That is just literally going sideways. And as I said, I expect that to continue until the election, until the budget there. Let's have a quick look at gold. Okay, bang. We're going to have a look at gold. Not massively dissimilar to FTSE, to quite a few of those US indices. Bit of an inside bar. You might say it's still a bit of an inside, momentum. It's still a bullish momentum. Okay, daily chart going a bit sideways. Maybe there's a bit of confusion. Okay, maybe there's a bit of confusion once they've got NFP and CPI numbers out of the way and the FOMC minutes. Maybe we'll have a bit more clarity. Okay, but people who have bought this breakout, they're probably quite happy sitting sideways there for a moment, waiting for the next pump off that. Silver, here we go, weekly chart, okay, up to those all-time highs. Didn't close there on the weekly basis, but we're certainly been pushing our way up there. You can see that on the daily chart. Every time we've got up there, we've basically been, we've rejected it. That was Friday's NFP. It was kind of fascinating that we pushed to highs, but came down and closed beneath it. I would be expecting us to basically to look to assault that level again. All right, what's that about? $32.50. Okay, that's what I'll be looking there. Okay, that's where they're going to be looking to work on that. Okay. So whilst that does, let's have a look. We'll look at dollar, and then we might have a little look at yen. And as always, we look to finish on sterling. Okay, as I say, I just race through. I appreciate it, dude. I'm just trying to share as much as I can with you at the start of the week that you might just want to add to your watch list or take a look at, or just give you a bit of a heads up. All right. So this is my dollar profile. Let's start with the dollar index. You'd known we'd talked about this for the last few weeks about how we were sat on the monthly 50, we were sat on the weekly 200 and on the big round 100 number, and we had to wait and see. NFP was going to give us a bit of direction. You can see what happened there. Bosh. Okay, bang. You can see all of that bash last week there. That was this is the daily chart. We talked, I think, last week about how we were basically pinned between the daily 20 there, okay, that was acting as dynamic resistance, and then we had the support of the big round number 100, and we just blew out of that. And you can see that's dollar strength there. After everybody been talking about it was the death of the dollar, we had a Dolla Holla. Bang, there we go. Okay, and I don't see any particular reason for that to be like a flash in the pan. All right, but we'll wait for more of that data coming out later this week. But you can see that was just very strong dollar, which then means, well, how did that look against the others? Well, we can see here. Let's just draw this. Euro dollar, Bosch, big bearish candle there. Sterling cable we'll look at in a moment. But even dollar against Swiss franc, okay, even though Swiss franc had been strengthening, dollar still managed to strengthen further against the Swiss franc. Japanese yen we'll look at in a moment. Kiwi dollar, look at that, Bosch, big bearish engulfing candle, key reversal candle. Aussie dollar here, Bosch, big bearish engulfing candle there. The only one that was kind of interesting was Canadian dollar. If you look at that Canadian dollar, it was a bullish candle, I suppose, but it's still remaining beneath the 50 in a small candle, and that is an indication of Canadian dollar strengthening. Because, as I said, we've just looked at the oil price there. So dollar strength there, okay, back in the game. Okay, that's what we look for, and follow that through. Let's have a little look at yen. All right, and I said earlier about the comments by he's the kind of PM at the moment, but he needs that election result to give him credibility. But him coming out, it's kind of very unusual for him to come out and say a comment like that. Okay, you've got to ask questions. What was driving him on that? Who's pulling his strings there? But dollar yen, okay. Last week you can see basically big dollar strength, yen weakness there. Even pound against yen, okay. Even when pound had been selling off, we still managed to put in a pretty strong bullish candle there. Euro yen, okay. Euro, remember we talked about it how it'd been dropping, but it still managed to basically put in strength there. Definitely against Swiss. Aussie, there was strength there in the Aussie, but maybe not as much. but it's still bullish against Kiwi, Canadian dollar against Japanese yen. Okay, CAD yen, good proxy for oil, and you can see that was reflected there. So yen has been top of the pile, okay, since pretty much the start of August, last couple of months, but that pretty much got reversed on at the end of last week with Kishida's comments. I'm hoping I'm pronouncing that right, but ultimately you can see that in the price action. Okay, the price action is reflecting that kind of that loss of confidence in yen off the back of his comments. All right, let's finish on sterling. As always, okay, I'd like to finish with sterling, see what's going on there. Cable weekly chart, all right, has been in its in its nice uptrend, but that kind of reversed last week. That is, you'd look at that. I would look at that as that's a doobie setup. It is an evening star setup. It is it's a reversal of fortunes, okay, for the dollar and the sterling, and you can see for yourself there, and on the daily chart, we're now sat on that daily 50. And, if that daily 50 breaks, well, 130, 80 pips lower makes a sensible level there, okay, that price could be drawn towards. So maybe we'll see. Maybe we'll get a little bit of a bounce before it goes down. That's what I'd perhaps be looking at. And the 200 sort of bending over and the 50 bending over as well. That would give us an indication of sterling weakness and dollar strength, okay, coming into play there. Pound yen, as we said, is carrying on there. Okay, pound against Canadian dollar, that's of interest because that has been a fantastic, strong trend. Sterling strength, Canadian dollar weakness. But look at that last week. All right, bosh, there we go. That is at 180. Big bearish weekly engulfing candle, key reversal candle. It pushes to new highs, falls over, closes beneath the low of the previous candle. The daily chart, okay, it started its way off, false breakout, rolled its way over, and inside bar above the 50. But yeah, I'll be interested to see if this closes beneath the daily 50. The daily 50 acted as support here, or we're going to flip it from support into resistance there. So, we're seeing dollar strength, we're seeing Canadian strength. And what we're not seeing as much, is kind of in euro sterling, despite euro dropping to 7th and sterling looking at top of the pile in the STAM. Last week's price action was pretty mad, up above 883. Okay, if we look in the daily chart, you can see we had been just winding our way down to this kind of 83.20 range. Okay, we got a pop for the euro, but it's worked its way down there. And as I said, euro's not been great. But it's been, and you can see for yourself there, that has been a great downtrend there for most of the summer. But I wonder if 83 is going to be kind of a sort of line in the sand. And what we'll see is that sort of sterling. It might not be euro strength. It might just be sterling weakness that starts to come into the market. Okay, we're starting to see it against others. The STAM environment for sterling pairs is very mixed. And I wonder whether the reality will happen and whether that will just be in front of that budget, and we see a major drop in the sterling. So it's going to be an interesting few weeks, right, for sterling traders like myself. Okay, there we go, ladies and gentlemen. Let's draw it to a close. There, as I say, I'm racing through as much as I can. I want to share as much as I possibly can to you. If you need to watch it again, sign up to the sign up to the blog, okay, at tradingbeliefs.com or FX Trader Paul, because I put the recording of this on there. If you want to watch it in a bit of a slower pace, you're very welcome. As always, I'm just trying to basically share with you as much as I can in the time we have together. For those of you on VTP, there'll be no stage 1 call this evening. Unfortunately, I have some family issues to attend to, but there will be a stage 2 call tomorrow. As I said, if you want to join me on the active trades call about trading gold, that's at 2:00 London time. You're very welcome there. For the rest of you, have a great trading week. I wish you the best of success in your trading endeavors, and I will look forward to speaking to you soon. Take care, everybody, and trade well. Cheers.